Hey, Tom here, FlipAnything USA. So today I want to talk about the economy, the lack of confidence investors have in the country right now, poor governance, poor USA governance. We got inflation, we got job losses. Uh, I think we've got a lot of issues, we got a lot of concerns. We've had way too much stimulus flow around, and now we're paying for it with inflation, and we're going to talk about that. And we're going to maybe look at some markets here. I'm looking at Phoenix right now. I've had probably three of my most recent students, and including myself. Uh, we all have an issue right now. We've all sold properties, have cash on hand, and my student Eric, he just made $700,000. Chris about 350, $400,000. Liam the same. Uh, Rich Ferradino, congratulations. He just made another $147,000 on top of another. It's like 700 he's making on something else. Russ has done well. But I've got guys that have combined at least have a few $1,000,000 right now that they're afraid to invest it. They don't know what to buy. And it's because they have a lack of confidence in the country. And I'm just happy that I got rid of everything. Now, I'm not completely out of confidence. I just bought a house last week, but it's a no-brainer. It's an easy one to make. Those of you just getting here for the first time, FlipAnything USA is a channel. I've been buying and selling real estate for 41 years, done really well at it. I've made tens of millions of dollars, and it's my favorite thing to do. And but we're going to talk about that, so hang out.
It's the best thing I ever did.
Anyways, so I mean, how many people have more confidence in investing today than they did 3 months ago, 4 months ago? And has it gotten any better since yesterday? Just any of the news events in the last day or two stir you up, make you worry? I can tell you, it just keeps getting worse. It just keeps getting worse. Anyways, let's go take a look at some of these other YouTubers here and see what they got to say. Let's look at these guys. Shit, this guy doesn't know. This guy doesn't know for sure. These guys don't. This definitely not. I don't know who this guy is. Joe Manusa, real estate. Yeah, he's probably got his finger on the pulse of real estate to a degree. I don't know him. Doesn't mean I endorse him. Just because I watch somebody doesn't mean I endorse him. You guys know that if you've been around any time. Look, young guys, a lot of these young guys, listen, you can't pull experience out of your ass. People that listen to people that haven't had any real life experience, that's just foolish. But let's watch Robert Kiyosaki. I mixed feelings about this guy, but maybe we'll watch a little bit of this. Let's see. We'll go ahead and run this up a little higher speed so we can get through it a little quicker. All right. Yeah. So, by the way, listen, if you just got here, please hit that like button, hit that subscribe button. I've got a lot of videos covering a lot of different topics. I'm a general builder, and I've been an investor. That's what I mostly do and what I primarily made the most of my money in my lifetime. But hit that like button, hit that subscribe button. I promise I never steer you wrong. And we'll be right. Here, let's just see. Let's watch a little bit of this.
Oh, I took your advice. I bought a house. I'm going to make some money. Listen, at the top of the frickin' market, don't listen to your stupid real estate agent who tells you that, the price of real estate always goes up, because it doesn't. When I hear people coming up to me, the price of real estate going up and they're jumping in to buy real estate right now, I don't say anything. And the reason is that people are just getting into the hype. All this credit is actually debt, credit and debt, pumping into this economy, trying to prevent this crash. And if inflation keeps going, I get richer. I am extremely happy. And I think Biden, I'm not Republican or Democrat, he intentionally wants inflation. That's why he shut down the XL pipeline. That's why he stopped drilling, to get oil prices up. When oil prices go up, you have all these truckers in Ottawa screaming They can't get food to the table.
Yeah, I'm going to disagree with him a little bit on that. Listen, I think the administration's doing a terrible job, without doubt. Horrible. Listen, absolutely. Oil prices going up. I mean, that's one of the reasons. I mean, everything's gone up. Everything's gone up. Everybody's been touched by inflation in the worst ways. It's putting people, and that's why, I put the cover, behind me that I did here, right here, is, I was looking at this, and, this was like the American dream, right? Have a house, swimming pool, live the American dream. It's what I dreamed about. I had that house when I was 25. I had a 3,000 or 3,300 square foot house, huge kidney-shaped pool, beautiful, beautiful, fantastic property in a neighborhood that I really, I was probably the youngest person in there that owned a home there because I had done so well so young. But that dream is getting taken away from the younger folks. And look, we keep plunging deeper and deeper in debt. And what do? We keep printing money, and it's just going to be passed down to the next generation, going to be passed on our kids. I mean, it's just going on and on. But the stimulus money, handing out money, that's what really causes inflation when there's a tremendous amount of money to be around. In other words, you got money, I got money, less products, we outbid each other. It drives the prices up because there's more money than sense, really, to be quite honest. And but let's keep listening to Robert.
On all this, prices of food go up. Inflation keeps going up regardless of what's going on, just because the policies of the Biden administration, shutting down the XL pipeline, stopping drilling of oil.
It's terrible. It's terrible. Listen, I will agree with him on that. Listen, it doesn't matter if you want the government, if you want the USA to be green, why would we buy oil from Russia? Why would we buy oil from the Middle East? We're completely energy independent. We can be. We were under the previous administration. And why, until we hit that marker, till we hit that green mark that they're shooting for, burn our oil. Keep the money, the profits within the USA in the USA. This is what's taking away confidence from people that have common sense. They don't believe in the country. They don't believe they believe in the country, don't get me wrong, they believe in the country and the people, but they realize the government is overriding the people. And so it's a scary thing. Let's keep watching.
So the price of oil goes up. I watch all this. And meanwhile, these people are jumping out and buying real estate like there's no tomorrow, and I can't even talk to them. We're on a turning point. But please understand, ladies and gentlemen, inflation makes the rich extremely rich. The middle class will pay higher taxes, and the poor will get poor because they're the ones who can't afford the $25 Wagyu steak.
Well, our $1,500 a month rent for a one-bedroom apartment. I mean, forget the steak. You can eat eggs and cereal, but this is the worst part about it is I never seen so many people living at home in my life. People that are in the 35 years old, they've got like a career crisis. Which, look, I'm going to plug the book here. I've got several millionaires in my class, and these are young guys just like you and me. If you're 30 years old and you're not a millionaire, or 40 years old, you're not a millionaire already. Get this book. If you're making some bucks, if you're making 80, 100 grand, 200, 300, 400,000 a year, whatever, it's not enough. Get the book and then join the mentorship. It's a no-brainer. Throw a couple grand on the mentorship. You can see all the testimonials. I'm going to run by this and we'll finish this up. But you guys stick around and listen. It's too important not to. What do I got here? Oh, crap. I'm taking you in the back end here. Anyways, let's see if I can get out of here. Yeah, here's FlipAnything USA. Go in here. This is where you take the mentorship survey. No guarantee that I'd take you in. I turn people down all the time. Ask anybody that's been turned down. There's a lot of them. Take the mentorship survey. If I think you've got what it takes to make it, I'll do it. This is what you want. Take this mentorship right here. I don't care if you buy it or not. Hang out and listen. This is free. Believe me, I tell more people that come into my mentorship, hey, just watch the free stuff. You don't need it. Hang on to your money right now. You can figure it out just with what I teach you here in the book. The book's $10. You can send it back if you don't like it. I don't care. I really don't care. It doesn't affect me. But what I love is I love these guys, like this guy here, Ken Buccio. He's made over $1 million now since he's been in the mentorship. He was afraid of a certain class of real estate that he's no longer fearful of, I think. And I've helped take care of that with him. And because I got experience in that particular area. And I mean, I've been doing real estate for 41 years, aggressively buying and selling. And it's wonderful to see people benefit from my experience. They get to shortcut it. That's why we go to school to learn things. You can't learn what I can teach you in any school. You're only going to learn it here. That I promise you. Anyhow, let's get back to Robert. I don't even know how to say his name. Kiyosaki? Somebody correct me? By the way, where's everybody? Okay. I don't even know. I'm going to have to pop out the chat and come back in. There you guys are. It doesn't look like anybody was here. All right, let's keep listening. Bear with me, guys. It's let's just keep watching.
That my friends are selling. So that's why it's one of the biggest critical turning points, and that's why I don't know how many years ago when I walked past Richard's book and Borders, and it says the dollar crisis. If you understand what's going on, the problem is the U.S. dollar. Because in 1944, it stopped being money. It just became the reserve currency of the world. And in 71, Nixon took the dollar off the gold standard. We're being set up right now, one of the biggest changes in world history. And it's, oh, I bought a property. What do you think? I can't even talk to him. Because this, to me, is 2007 all over again. And then the repo market collapsed. 2008, the market collapsed. And back in 2008, this guy named Bernanke, I believe it was, could print money. And this is where we are today. You've got to wake up, ladies and gentlemen, because otherwise you're just this stupid little hog just driving to slaughter.
Yeah, and what does wake up mean? I wonder when he says wake up, what does that mean? I mean, how do you pound common sense into people's brains? Listen, number one, you got to vote. You have to vote. And don't listen to, make your own decisions, right? This is like he said, don't trust a realtor. Don't trust an agent. Don't trust anybody that stands to make a profit on you. It's foolish. They stand to make a profit from you. You can't believe it's a conflict of interest for them to tell you the truth necessarily if they think it's good for them and bad for you. So, but anyhow, I'm just going to say we got a country that people are apathetic. They don't pay attention to what's going on. And there's even some very, very rich people that are just dumb as a stump. But it happens. So what do you guys got here? Love the book. Glad you love the book. It seems like the last rate hike we got, I'm trying to read what she said, got laughed off. Yeah, well, listen, expect another one. Expect another rate hike next month. Probably another 0.75%, maybe 0.5%. The country's kind of in the toilet. Hey, Russ, glad you're in here. Bishop, you too. Good to see you, buddy. Aaron, yeah, that channel always makes me... I haven't watched it. Listen, I haven't watched... I don't think I've ever watched a whole episode of his thing. I wasn't a fan of the book. I think he's okay. I know some people like him. There's a lot of people like Suze Orman, who I think is ridiculous. Dave Ramsey this is just baby step stuff, like common sense, anyways. We got a little more advanced class here, okay, of folks, more sophisticated investors than that. Let's keep watching.
So America is we're at, not just America, but one of the biggest turning points in world history. And like Rockefeller, one of those guys said is, when shoe shine boys are giving you stock tips, time to get out. And I was in Safeway the other night. These people.
That's a good point. And listen, we got a whole group of I'll get over here of shoe shine boys, as he put it. Some of the people, well, these aren't the guys, but yeah, I'm just saying we got these young guys that don't know shit. Went from real estate agent to YouTuber, and people pay him to promote this or that or Bitcoin. And all of a sudden, I was trying to figure it out the other day. Why would somebody listen to somebody so young? I think it's because it instills confidence that maybe there's a chance that someone young can be smart, and there is. But you can't, like I said, you can't pull experience out of your ass, and that's just common sense, and that gets lost all the time. But let's watch the rest of this depressing video. So
I got a high speed. I did what you said. I bought a rental property. And I came back home and I said to Kim, I have to sell. It is so dangerous, but you can't talk somebody out of it because they drank the Kool-Aid. So that's why I'm really honored to have a dear friend, Richard Duncan, been friends for years. He helped Kim and I time the last turn back in 2008. We made fortunes because while everybody was selling, we were buying. And that time has come again. And so that's why please listen to what Richard Duncan has to say.
A few months ago, the Fed was still creating...
I don't know Richard Duncan, but this sounds interesting. I think this is worth a listen.
$120 billion every month. And then in November, they said they were going to start tapering that, reducing that by $15 billion a month. But the very next month in December, they said they're going to double that, and reduce it by $30 billion a month. And that meant that it's going to come to a complete stop. The money printing is going to end totally early next month.
No more printing next month.
No more printing. And then the real blow came because in early January, they started letting it be known that they were planning to do the opposite. Instead of printing a lot of money through quantitative easing, they're going to start destroying a lot of money through quantitative tightening. Now, when they print money, that pushes asset prices up. When they destroy money, that tends to make asset prices fall. And in the stock market,
how do they destroy money?
Well, they destroy money because when they print money, they buy bonds with that money. And normally, when the bonds mature, they just roll them over and buy a similar kind of bond. But they destroy money by essentially selling those bonds. And when the Fed, what happens is the bonds mature, and the Fed doesn't roll them over. Someone else has to buy the bond. So the Fed gets its money back. And when the Fed gets money back, that money just evaporates. The Fed doesn't need to keep any money because it can make all the money it wants anytime it wants to.
Oof.
So it's a bit complicated to explain in just a few sentences, but the bottom line is...
And listen, I don't pretend to exactly understand that, but it sounds like you're doing is cross-collateralizing. In other words, here you got cash backing up a bond and then cross-collateralizing on it, which, again, it's just like printing money, basically. It makes it worthless. People have speculated that we are so indebted to the Chinese, because they buy our bonds, that at some point we go belly up, and then what do? They forfeit our assets. What a nightmare that'd be. And so consider that if the debt, the government creates this debt, who is it insured by? Who picks up the tab for all the spending? Who? Us, right? We do. So think about that. If they create so much debt, and the trillions and trillions of dollars of debt we seem to create every damn year now, at some point when we go completely broke, we are the insurers of that credit line. We are. And so are they going to take everything that we own? I mean, is it going to be a war? I don't know what else it would be. It's going to be war to try to take my stuff. So anyways, let's keep watching.
It's the opposite of quantitative easing. Quantitative tightening destroys money, and that tends to make stock prices fall. And we're about to get a heavy dose of quantitative tightening coming into effect within the next couple of months.
And it's going to make it harder and harder for mom and pop to go buy that house expecting on a flip.
And isn't that going to drive inflation through the roof?
Well, they think the opposite. Instead of printing money, that's the thing that normally causes inflation. It stimulates the economy, it creates growth. But when they destroy the money, that tends to make asset prices fall, like stocks and property. So people are less rich, so they spend less money. And if they spend less money, then prices tend to fall. So that's why they're doing this. They're worried now that the inflation rate has moved up to 7%, and they're taking steps to bring it back down. But what they may find is this could cause a significant stock market crash. And already last month, the S&P...
See, this is already old. This goes back to May. But anyways, it doesn't matter. We can see the interest rates have gone up 1.5 points since this, and they're probably going to go up another 0.75 of a point. If you qualified for a $400,000 home, now you probably qualify for a $300,000 home. In which this case, the only place you can buy is going to be out of my town. You're going to be in my town. There ain't nothing that cheap here. So it's just kind of. We're losing faith in the country, right? I mean, as an investor, as the investors that are in my class and other ones that I know, a friend of mine got out of all this real estate a couple of years ago. I always buy. But listen, I'm one of a kind. In my group is one of a kind. We buy based on today's value. It doesn't matter. Today's value might be 300. 3 months ago, that might have been 350. So we factor in that $50,000 loss when we buy today. We don't believe anybody, okay? We don't trust anyone. You can't trust anyone. You have to think for yourself. But anyways, and take a quick gander at this, and I'll be right back. Take a look at some millionaires in my class. It's really a perfect storm for making money in that respect. But in 1 year, his portfolio has gone from zero to $1.6 million. You really got 30, 22?
Yeah, I think I got 27, yeah.
27 properties. Yeah, 27 properties. John, you have to buy that. That is a great property.
I just closed on 2 houses yesterday. It's worth $250. I bought that one for $170.
My first millionaire student. I don't want to screw around. I don't want to play games going back and forth. What is the absolute bottom dollar? And I'll tell you if I'm going to buy it or not. All right. So anyways, I love seeing those guys. Several of those guys have already made it. Some of those guys are millionaires that weren't millionaires when that clip was taken. So it's a wonderful thing. And listen, if you got any interest in real estate, get this book. I don't care about the $7 that I make. I think if you don't like it, you can send it back and get a refund. It's Amazon, right? I don't know about the Kindle Audible, but you can probably send the book back if you didn't like it. And I don't even care because $7 means nothing to me. I only want to help people excel, right? I don't know what to tell you. I'm 60 years old. I've had a charmed life. Nobody handed anything to me, but I was smart enough to role model off of people that were bigger and better and brighter than me. And I asked questions and I learned and I studied them, but mostly a lot of it is just from doing. And anyways, it's an opportunity, trust me. But let's keep watching.
Fell almost 10%, and NASDAQ fell 15% between the 4th and the 27th last month. And some of the high-flying stocks got hit a whole lot harder than that.
Look at Meta or what Facebook, whatever those are called now, they tanked.
It lost 26%.
So here, actually, listen, Russ actually just asked a question here. Russ, good, smart guy, young man, big family already. You're doing very well. Really, really awesome, Russ. You're a smart guy, and I'm glad you're in the class. He says, Tom, do you think that the Inflation Reduction Act will actually make real estate go up? Listen, since there's more dollars in the economy, listen, anything the government, it's just about everything, anything the government proposes, whatever the name is, it usually means the absolute opposite. Doesn't matter what it is. If it's the child protection bill, it doesn't protect kids. If it's the black education bill, it doesn't educate blacks. It never does what it says. It's just an excuse to put a bunch of horseshit in it that they can hand out money. And listen, rarely does a bill go through or any proposition that it ever really means what it says. It's just usually an excuse to slide something else through. So this is one of the reasons why I have no faith in the government. I mean, I just look at we got the dinosaurs running the country. They've been in there 40 years, and it just gets worse. I mean, how could you even, you know what I mean? I mean, they got failing grades for 40 years. We're in more debt than we've ever been. It's a giant fucking mess, and they're still there. They control it. Both sides. It's not even two parties. It's one party. So you can't believe it. They get to live like billionaires on us, and there's really, all you can do is maneuver it and do the best you can. Your only hedge against bad governance, and we have horrible governance in this country, is to make money. That's it. That's the only thing you do. Make money. That's your only your head. That's the only hedge you really got to not be affected by the stupid policies that they put in place. Anyways, let's keep watching.
In a day, destroying $230 billion of American wealth.
There goes your 401k, sweethearts. And that's why you guys spoke out against 401ks forever. And all you guys you're planning on renting your property, people won't be able to afford the rents. That's what it means.
Well, so total credit is...
I just want to say this. I don't have a 401k. I use my money. I take my money and I parlay it over and over and over. It's compounding investment. In other words, I keep whatever I make, I throw back in to buy into something else. If I sell something for $1 million, I go out and buy something for $2 million. When I sell that $2 million, I'll buy maybe something for $4 million or $5 million. In other words, I keep compounding my profits. That's how you get rich. That's how I got rich in real estate, and that's how the people that I know that have made the most money in real estate, that's how they did it too. And he said these people can't pay rent. You know what? When you own enough real estate, you can afford to let somebody stay there for less. And in other words, like I said, people can't afford to live most places they live right now. When I was a kid, the rule of thumb was don't spend more than about 25% of your income or 20% of your income on rent. Don't spend more than 20% of your income on rent. People today spend 50% of their check on rent, and usually they got a roommate. They're splitting something that's so ridiculously high. I've seen people that made $4,000 a month go rent a place for $2,200 a month. I'm like, what the fuck are you doing? You can't afford this. And they're all like, that's where my friends are, and that's where everybody that I hang out with. But why would you piss half of all of your income away? I mean, you got to sacrifice. You don't get living with your friends. Anyways. But this is the kind of stupidity, and people get into this acceptance. It's okay to not think about tomorrow, and people don't think about tomorrow. I talked about this the other day. The typical trend. Listen, real estate does continue to go up. Historically it's always gone up, but just say on average it goes up 8% a year. I said on average. So when it went up 100% after Grant Cardone said sell your house and buy into his program, and the real estate went up like 100% in some areas and even more in others, it went up that much. Well, now it's going to plateau. So it may not go up. It may stay. It may go down too. Listen, I've had real estate values go down in my lifetime too. I've had properties go down, and it's a real thing. Property does go down. Property can drop. Look at it like a stock, right? It's going up, it's going up, it's going up. Getting backwards on the screen here, stage right, stage left. Say the stock is going up, right? It's going up and then it goes down. And then it goes up and then it goes down. Okay, on average, you can still say that it has kept going up. It's you getting in between, you getting in that dip. I mean, you get burned in the dip. You can lose your ass in the dip. Is it a V recovery? Does it come right back, or is it a long, shallow plateau below and then come back up later on? These are the things that can wipe out young investors, and I don't disagree with what he said about. I mean, he's kind of just condemning all real estate. This is what I don't like about a lot of people that talk about real estate, is they talk about it like this is what the price of real estate is. Like it's okay to buy now. Like it's okay. It's retail, but anyways, it's always a good time to invest. Like Warren Buffett would tell you, never stop investing. Just never make a bad deal. I mean, I'm the one who says that. There is no bad real estate. There's just bad deals. Don't overpay. If you think something is going to be worth half of what it is today, then pay 25% of what it's worth today. I don't even like to speculate. I buy based on today's values, and if I see things are trending down, sure, I'll pull back and wait and say, well, let's just see how bad it gets around me. My economy is like within 15 miles of me, right? Just one big 15-mile circle. I don't have to go very far. And neither do you. The idea that you need to be worried about the whole world economy is stupid and ridiculous. And people love to eat that shit up. But they don't need to know that much. I mean, on a federal level, sure. Matt Bittner, is it nominal terms might go up? Property Solutions, hi Tom, do you think it's a good idea to drop prices aggressively on rehabs? And listen, I can tell you, there's a chapter in my book, Property Solutions. If I can already tell you don't have it. Get my book. It's called... Somebody tell them what that chapter is that's watching. Anyways, let's see if somebody's got it here. I know somebody will. Anyways, I got to get back to your question now. Do I think it's a good idea to drop prices? Listen, in a declining market, I'll just shortcut you. In a declining market, yes, jump ahead and drop your prices way ahead of everybody else. If it seems like things are going down $10,000 a month, take $50,000 off. Get 4 times ahead of everybody else, and you'll get yours sold. By the time it gets down to what your property's worth, the deal will close. It'll be gone. Leapfrogging. Thank you, Delta. Leapfrogging. That's what we call it, leapfrogging. And I do it both ways. When in a declining market, when I can see the shit, my properties are going down in value, and I want that money, and I need that money. Right on. Hang on. Adam F. Property Solutions, rest of it is good. All A pluses, G2 and Delta 2. Everybody got it. That's got the book. And you'll get it too if you get the book. So you leapfrog. So believe me, there's worse things than, like Hank Booker. And what did Hank Booker always tell me, right? What did Hank Booker always tell me? You can never... I'll let somebody finish that. Anyways, you can make a fortune doing the right things, but you gotta learn. You gotta learn from the actions or study stuff that's happened to you. I've got a whole lifetime to go reflect on, thank God, and I've survived it all. But you can never get hurt taking a profit. And so when you leapfrog and you jump ahead of everybody and you discount your property more than everybody, you come out ahead, because instead of taking turns going down like steps, it's like everybody's taking turns taking steps. You jump down a whole flight of stairs and sell it there, and say 50,000 off. You get rid of it. Now you got your money. You got your money. They don't. They're taking turns, incrementally stepping down. Well, smart guys like you get out. Same thing going up. When property values are going up quickly, or if you're in a bid situation, I had a fantastic deal in an auction setting, and first thing I did is I went right up. Well, these guys are going 100,000, 110, 120, and this is like a day-long deal. It's not like an auctioneer. It's like a silent auction. Well, I slip over and I say, hey, listen, they're at 105 and 110. I'll give you 160, but you got to close it right now. Right now. We're going to close this now. Or by, and then say, well, I got to call. I said, well, I'm emailing you right now. Here's my offer. He's asking me put it in writing. I said, okay, what's your email? I give it to him on the spot. We're standing there. He forwards it while I'm on the spot. I say, forward it. He forwards it to the seller. Seller gets it. Says, shit, these guys are fighting over 110, 115, and this guy just jumped in and said he'll pay 160, but we got to close it right now. He goes, that's a bird in the hand. A bird in the hand is worth 2 in the bush. Closed the deal, and that property's worth about $490,000 now. I flipped it earlier, but I still made $100,000 on it. That's leapfrogging going up. And then the other example is when you're in a declining market right now, you leapfrog going down to get out. And you listen, believe me, you won't have any regrets selling your property. You know, even if it doesn't get to as low as what you sold it, the fact that you got out and you got cash and other people are stagnant, you've got the money. And that's the key. Is right now, my students, as painful it is they're going to have to pay taxes. These are rich people problems already that my students have, and I love it because they're faced with either buying something and deferring their gain or taking their lumps and paying the taxes on it. And either one is fine. But the last thing you want to do is jump into a property that is declining. You may as well have just hold on to your cash, take your lumps, pay the taxes, and you know, and now you've got power because now you've got cash at hand waiting for you. You know, Eric, it was wonderful. Eric was going to come in and talk to everybody the next day. Eric's one of my students who just made 700 grand. Well, of course, Saturdays, almost every Saturday I do this live, talk directly to all my students. That's mentoring. That's the advantage of buying just some stack of papers from it. It's being able to ask questions specific to your issue and your property, and we jump all over the globe and look at stuff. But where I was going with that is Eric, he celebrated the $700,000 he made, and so I was expecting him in the class at 10. He came in, the class went long, like over 3 hours, and he comes in the last 2 minutes of the class, right when I'm saying goodbye, he pops in, I'm going, hey, what are you doing? He had too many old fashions, okay? What a nice problem, right? To, you know, get drunk, wake up hungover, and you got 700 grand in the bank. Nice problems, man. These are rich people problems. I love it. So really proud of everybody, man. I'm telling you, listen, if you're not rich already, if you're not a millionaire and you're 30, 40 years old and you're making 100 grand a year, you're doing something wrong. You're doing something wrong. So get in the class. If you can afford it, take the mentorship. If you only have several $1,000s or $5,000, you know, maybe even $10,000, maybe you shouldn't get in the class. Just wait. But get the book, read the book. Okay, there's other people that are bright enough that they have $5,000. I'd say, yeah, spend $2,000. You'll make it back quickly. Some people I don't have that much faith in some people. But I don't necessarily like to project that my lack of faith in somebody. I just make it about their money. If you don't have enough money, I say don't do it. But and the reason I have a problem turning away some of the young people, I turn away a lot of young people, but I started at 19. And so I don't want to dissuade anybody. Delta's a young man. Delta's 19, and he's bilingual. And I'm telling you, you run with it, kid. You're bilingual. You're young. You're smart. You're like a very astute student here. You're gonna kill it. It's awesome. Anyways, what can we talk about? What else? Anybody want to call in? You can call in. I got a Bluetooth here. If anybody wants to call in, we can call in. And if anybody's got something to talk about or say, you can call in. You guys in the mentorship, you know my number. But let's see, Barry Holiday, I would just do 6,012. I don't know what that means. Tom, do you hold any gold? No, I think gold is, if you look at gold historically, it's the worst investment in the world. It takes forever. I mean, it hasn't appreciated. It doesn't even come close to real estate. That's why somebody said the other day, hey, your book's worth its weight in gold. It's kind of insulting. It's worth more than that, okay? If it was pure gold, I'm not even sure exactly what a book, but a book doesn't weigh very much. Anyways, it's worth a hell of a lot more than that. So anyways, I hope they weren't offended when I answered that way, but it's the truth. Yep, Adam F. got it. You never get hurt taking a profit. When I said, what did Henry Booker teach us? Henry Booker was one of my, and I hope he's still alive. He's about 82 or 3 now. This guy owned a shitload of property in Los Angeles. Bright guy, smart guy, nice guy, and he was a fireman. He worked 3 days a week, and in that 3 days a week, he get a full 40 hours in his week, and then the other 4 days, he was pouring concrete and buying real estate. You know, he made money all the time, and he made good deals all the time. And next thing you know, and this is going back 30, 40 years, I couldn't even tell you exactly as well. There might be 100, 200 million. I don't even know for sure now, but he was a very rich guy at that time, and you know, I remember bought a building for $4 million. This is back in the '80s, early '80s when I was starting. It was a lot of money then, and he was really nice to me. He could see that I was bright and interested, and he'd say, Tommy, you never get hurt taking a profit. In fact, he bought a couple of buildings from me, and a piece of land, and he had carried notes on about 40 houses. I think that's right, about 40 houses, and he was carrying second trust deeds on all these houses. Guess what happened? L.A. Boom, earthquake. This is what'll total a house big time, is have an earthquake, and then the chimney, fireplace, collapses down through the living room and destroys the trusses, and just damages the house terribly. So much damage that the insurance, sometimes they don't have earthquake insurance. Sometimes they just don't want to offer the extra money because it's so rare that it happens. Well, it happened. So all of a sudden, he's carrying a second on all these houses, and the property is now not even worth what's owed on the first. So people are walking away saying, hey, I can't pay anymore. I can't even afford to fix this place. I don't have insurance. And he's torn with either taking over the property and fixing it up, or just letting them go, saying, all right, well, don't pay me, just keep the house, I guess. And I've had to do that with people too with land. I've just said, they made payments to me on a second for, years or months, and then the economy went bad, and I'm like, hey, you know what, just keep it. I don't even want to take it back. Why do I want to take back a property that's in a declining market? I mean, it could make sense depending on what it's worth. I did take one back. I sold the property for $520,000. They owed me they owed me $295,000, and they were going broke. They couldn't pay me the $24.50 a month that they owed me, and so they deeded it to me. You learn about that. They deeded it to me in lieu of me foreclosing. I said, I don't want to foreclose on you. Just give it back to me if you can't make the payment. They gave it back to me. Then they came back 2 months later and said, hey, Tom, we found somebody that we were trying to sell it to before you, and now they'll buy it from us. But they'll only give us like they'll pay $240,000. We'll connect you with them. Can you give us some money? I said, sure. I said, I'll sell it to them for $240,000 and I'll give you $20,000. And that's what happened. I sold it for $240,000. So I had a note for $295,000 that was owed to me, and now I get the property back. So I sold it for $240,000, which is $55,000 off of what was owed to me. So I lost money on that, and I lost. In other words, that was all profit. That $295,000 was all profit. But now I gave up. I had to take it back, so I no longer had the income. They got it sold for me. I gave them $20,000, and I sold it for $240,000 less than $20,000, so I got $220,000. So basically, I took a $75,000 hit on the note, but it was all pure profit anyways. And to be honest, in that moment, I would have rather had the $220,000 cash than having an IOU for $295,000. So it worked out fantastic. I took that cash, bought other stuff that became worth millions as well. So let's see what you got here. Morkel, LOL, the books weighs about 1 pound. So that would only, okay. Is that right? Is that right? 16 ounce? That all gold's worth? Seems like it'd be worth about $32,000. I don't even know what gold's worth. See, gold was $1,300 an ounce, I think, 30 years ago. I don't even know what it is today. Success Capital, as a beginner investor, would you start with small? Okay, get my book, Success Capital, because, and watch me more, because what you would hear me say is, you don't need to focus on any one thing. I've owned apartments and made millions on them too, but what I'm saying is there's no bad real estate, there's just bad deals. I buy houses all the time because there's so many houses. I don't focus on houses. I'm always looking for commercial buildings and industrial buildings. That's what I mostly buy, and I have 165,000 square feet of rentals, and it's mostly commercial, industrial, retail, where people are working, and I love that base of a tenant. Believe me, I love tenants that are self-employed, because they're the toughest people around. They're never gonna give in and become a worker. They're never gonna go back to working a 9 to 5. They will always be self-employed, and they will figure it out. They'll figure it out. Things are going down, they'll start something else. If they're selling ice cream and that doesn't go, they'll start selling coffee, whatever. They are the best. That's why I love my retail tenants, and that's why I have so much retail property and industrial property, people that build things. I love manufacturing. And then we go from there. Then you've got people in houses. Well, people in houses can be people with jobs and this, that, and the other thing, and that's fine. But it's not the most stable, right? People lose their jobs. You hear this stuff, this scare stuff. I'm not even. I can't even speak to it because whatever. I don't know this guy's exact record, but I have seen things tank and people lose jobs, lose their homes, all that sort of shit. A lot of heartache stuff, but. Retail folks, people, that's why I love the retail. They survive. Houses, I buy them, but I buy them under market and I just resell them. So I make my money the day I buy it. That's when I make my money. I buy it under market and I flip it. So buying houses is the best thing you can do. I think in the beginning, look at houses, look at land. I don't like land in a declining market. I'll be honest. I don't like land. I just paid $2.5 million for a piece of land. 6-8 months ago, but I've got the money, the capital to take, to do that. It's not a big deal. But if that is a big deal, don't buy anything that can devastate you, payment wise. That's why you got to be so careful with your money. All the gurus say focus on one niche and one strategy. You're essentially saying focus on the deal. Absolutely, always focus on the deal. Listen, this stuff they used to say, oh, we're gonna do a duplex hack. A duplex hack. I mean, oh wow, what is this incredible hack? You're gonna live in one side and rent out the other. Fuck, give me a break. I'll give you a duplex hack. Buy a duplex that's under market, resell it, and take all the profit. If you can, live in a duplex and you can live in one side for free because one side pays your mortgage, rent both sides. Okay, rent both sides and make as much mortgage as the bank's making on the payment, and that's smart investing. Then go do another one. Believe me, we were talking about earlier. I was talking about. When I was young, the idea was pay 20% of your wages. Don't spend more than 20% of your wages on rent. Okay, when I was young, I didn't even spend that. I mean, I paid $125 a month for a little shithole trailer sitting on a dirt lot, and I could have lived better. I had a girlfriend before that. I was living in a $1,000 house, which was kind of a little bit expensive at the time, and I was splitting with somebody else. But my point is, live below your means. Suffer a little bit now, and just I look at when you're young, there's no reason for you to be at home. I mean, if you got a kid, you got a kid. But I mean, there's no reason for you to be at home. It should be just a place to hang your hat, sleep, do your laundry, and eat and go to sleep. And it doesn't have to be, you got time for that stuff later on. Suffer early. Keep your overhead low. Live in a safe place. Of course, live in a safe place. Drive in a decent car, a safe car. But don't let it rule your life. In other words, don't let the tail wag the dog. Don't let it be so expensive you can't afford it. And no, I don't think Too Small do a fourplex. No, I don't agree with that, Brandon. There's no bad real estate. There's just bad deals. You could buy a lot for $5,000, sell it for 10. And I tell people all the time, the deals that are under $100,000 are always the best. You can always, the easiest money to double is investments under $100,000. You'll see the most opportunities to triple. In other words, if you put $10,000, you can make $30,000. You can earn 5 into 15. You can make much greater profit ratios with investments under $100,000. There's just more of that stuff available out there to do it. Anyways, real quick here, guys. One more plug, and then we will come back and finish up.
Stop and listen. Time is on a mission to eliminate all of the snake oil and the fake gurus that fake y'all. He'll show you how to build an empire, starting with nothing but a desire. All you really need is a good mentor, not a used car bullshit. With time, you'll learn to crush it. Investing like Warren Buffett. With real estate, you cannot procrastinate. Everyone who hesitates is left at the starting gate. Hey, yo, so don't delay and join today. The mentorship and flip anything. USA, go.
Yeah, so Jason just wrote, for 12 years, I managed 64-unit apartments, and the hardest thing was having to file eviction on someone after losing their job. Yep, it's a reality. It happens. Some people have never seen a downturn. I started in a recession. I don't even consider 2007, he referenced 2009. I don't even consider that a recession, not compared to the one in the 80s. But, hey, listen, I appreciate everybody hanging out, watching. I want you to please hit that subscribe button, hit that like button. If you're new to the channel, hit subscribe. Listen, I am honest. I am truthful. I got no reason to lie to you. I won't do it. I won't do it. I want my legacy to be one of being a truthful, honest person that's help people make millions, okay? That's what I want. I want you guys to, just to remember Tom. Remember old Tom, how he helped lead you to doing better decisions. And, when I see guys 40, 50 years old, make several $100,000 or even a couple $1 million now, and they can write checks for college and pay cash for homes and write checks for cars and all that other sort of thing, it is a wonderful thing. You know what I mean? I'm not trying to buy my way into heaven by doing these good deeds, but hopefully it'll help. Anyways, I appreciate y'all. You guys, please, again, hit that subscribe button, hit that like button. And comment often, and any questions, anything you want me to cover. And by the way, I did this kind of a cool little video I just did the other day, a little off topic. I know a lot of people don't like the handyman do-it-yourself stuff, or when I show you the nitty-gritty stuff, but I love to work with my hands. I love machining. But watch that video I just did on buying stone, buying stone by by the ton. And then the one before that with Chris, he did a ride along with me. I went to going to my different assets while I talked to him about his money troubles. It was pretty cool, I think. Anyhow, if you're new, you might check that out. If you're already in here, you probably already seen it. Somebody else wrote, I think prosperous markets are harder for newbies, but easier for. Listen, the smarter you are, the easier it is. Let me tell you what you'll come away with me, and this is a wonderful thing. Is first of all, you're going to doubt you're ever going to make a first deal. That's going to be great. Then you're going to make, look at Herb. Herb just made $104,000. He's a real estate agent. And he's not an investor. Now he's an investor. He wasn't, though. Now he's an investor. And like a real investor. I don't mean just somebody that buys a home. Anybody can call themselves an investor just because they buy a house or they buy some stock in Pepsi. Yeah, that ain't enough. I'm talking about a real profitable investor, a moneymaker. And Herb made $104,000 on his first deal. And I'll tell you, to his credit, I was like, hey, Herb, I'll give you 10 grand. I'll just take the place from you. Because that's the investor in me. He says, no, I want to do everything. I want to do it all the hard way. And he bought the place. He did the value add. And guess what? He just made $104,000. And those are the kinds and now he's looking for his other property. He's looking for his next property. And that's a wonderful thing. So listen, you guys, if you haven't made your first deal yet, don't worry, you're going to do it. And everybody else, listen, I call them the diehards, the guys that come in and sit there with me for 3 hours almost every single Saturday. Those are the diehards. And really the toughest of the diehards are the guys that haven't made a deal yet, that are still getting their education. It's tough to do. I know, it's tough to do. Everybody wants instant gratification. That's why there's so many, these people get just taken advantage of, just because they want to get rich quick, they want to think it's super easy. And it is easy. It's easier than working your whole life. It doesn't compare to that. But anyways, hey, we'll see y'all later. Again, subscribe and take care. Appreciate you hanging out.